Have you ever paid for something with your phone, transferred money to a friend instantly, or used an app to manage your investments? If so, you've already interacted with FinTech. But what is FinTech exactly? And why is it suddenly everywhere? FinTech, short for financial technology, is exactly what it sounds like: the use of technology to improve and automate financial services. It's not about replacing traditional finance entirely, but about making it more efficient, accessible, and affordable. Think of it as a digital revolution reshaping how we manage our money. For decades, finance was largely dominated by brick-and-mortar banks and institutions. Getting a loan, opening an account, or even sending money internationally could be a slow, complicated, and expensive process. FinTech is changing all of that, and it's doing it at a rapid pace. So why is FinTech so relevant right now, especially for those of us in the US? Well, consider a few factors. First, smartphone penetration is incredibly high. Most Americans have a smartphone, and they're comfortable using it for everything from social media to shopping. This creates a natural platform for mobile financial services. Second, there's a growing demand for convenience. People want to manage their finances on their own terms, whenever and wherever they are. Traditional banking hours and physical locations simply don't cut it for many. Third, there's a significant portion of the population that's underserved by traditional financial institutions. This includes people with limited credit history, those living in rural areas, or those who simply find traditional banks intimidating. FinTech offers alternative solutions that can reach these populations. Let's break down some of the key areas within FinTech. Payments are a huge part of it. Think about companies like PayPal, Square, and Stripe. They've made it incredibly easy for businesses of all sizes to accept online payments. Venmo and Cash App have revolutionized how we send money to friends and family, eliminating the need for checks or cash. Then there's lending. Platforms like Lending Club and Prosper connect borrowers directly with investors, often offering lower interest rates and more flexible terms than traditional banks. This is often referred to as peer-to-peer lending. There's also Buy Now, Pay Later, or BNPL, services like Affirm and Klarna, which allow consumers to spread the cost of purchases over time. Investment is another area experiencing massive disruption. Robo-advisors like Betterment and Wealthfront use algorithms to manage investments automatically, making financial planning more accessible and affordable. Apps like Robinhood and Webull have lowered the barriers to entry for stock trading, allowing anyone to invest with just a few dollars. Insurance is also being transformed by FinTech. Companies like Lemonade are using artificial intelligence and data analytics to offer more personalized and affordable insurance policies. They're streamlining the claims process and making it more transparent for customers. Blockchain technology and cryptocurrencies are often associated with FinTech, and for good reason. While still relatively new and volatile, these technologies have the potential to revolutionize financial transactions by providing a secure and transparent way to transfer value. But how does all this actually work? Let's take a simple example: a mobile payment app. Traditionally, when you pay with a credit card, the information has to go through a complex network of banks and payment processors. This can take time and involve various fees. A FinTech app simplifies this process by using digital wallets and secure payment gateways. When you make a payment, the app encrypts your information and sends it directly to the recipient's bank, bypassing many of the traditional intermediaries. This makes the transaction faster, cheaper, and more secure. Another example is a robo-advisor. These platforms use algorithms to analyze your risk tolerance, financial goals, and time horizon. Based on this information, they create a diversified investment portfolio and automatically rebalance it over time. This eliminates the need for you to manually manage your investments, saving you time and effort. The benefits of FinTech are clear. It's more convenient, accessible, and affordable than traditional finance. It empowers consumers with more control over their money and provides access to financial services for those who were previously underserved. It fosters competition and innovation in the financial industry, leading to better products and services. However, FinTech also comes with its own set of challenges. Cybersecurity is a major concern, as digital financial services are vulnerable to hacking and fraud. Regulatory uncertainty is another challenge, as regulators struggle to keep up with the rapid pace of innovation. And there are concerns about data privacy and the potential for algorithmic bias. Despite these challenges, the future of finance is undoubtedly digital. FinTech is not just a trend, it's a fundamental shift in how we manage our money. As technology continues to evolve, we can expect to see even more innovative financial products and services emerge. From personalized banking to AI-powered financial planning, the possibilities are endless. In short, FinTech is the application of technology to improve financial services, making them more accessible, efficient, and affordable. It's impacting everything from payments and lending to investment and insurance, and it's reshaping the financial landscape for consumers and businesses alike. It's driven by increased smartphone use, demand for convenience, and the need to serve underserved populations. Remember, this information is for educational purposes only and should not be taken as financial advice. Always consult with a qualified financial professional before making investment decisions.